monetary policy is the main issue that we as traders, investors, market participants are dealing with. And, a lot of folks may be tempted to put their finger on one reason or the other about why we're seeing the kind of chop that we're seeing. And by the way, gang, it is chop, right? That we're seeing the chop. But the bottom line is on December 18, Jerome Powell decided to basically stop spiking the punch bowl. Rate cuts, the bulk of them are done, right? 1/2 point cut, 2 quarter point cuts, maybe one more quarter point cut. And it's a little bit on the lesser probable side of things, 2 quarter point cuts for 2025. So that's it, right? The current rates are sitting at 425 to 450. It's very likely that come mid to late summer, they'll be at 400 to 425, which is 4 to 4.25%. And it's unlikely, but it's not improbable that we might see another quarter point cut, bringing the rate down to 3.25% to 4%. This is why equities are kind of unhappy, right? The main reason much of the rally in 2024 was as good as it was is because not only were we dealing with news that was supportive of equities, the backdrop of all of this was lower rates, right? And so that singular narrative is gone. The next thing that we have to deal with is just the fact that what we traded back in 2024 is not what we have right now. We trade the right edge of the chart, right? This may not be the right edge that we want, but we do trade the right edge of the chart. And right now what we're seeing is, well, let me backtrack for 1 second. The chart, what does that mean? Right? This is a conversation we had in the Sector Secrets Mastery Room today, and it really does boil down to time frame and time horizons. We have our time frame, we have our time horizon. Time frame is what's the setting of the chart? Is it a 1 hour chart? Is it a daily chart? Is it a weekly chart? Is it a 5-minute chart? Depending on that interval on the chart itself, then we have a time horizon. How long could we be in the trade? If it's a 5-minute time frame, that's a day trade. The time horizon is 1 day, today. If it's a 1 hour time frame, the time horizon for me is usually less than 5 days, usually 2 to 3 days, right? That's how long I could potentially be in the trade as a general rule, right? Obviously, we want to be out by the time the option expires, or we run out of contracts because we've hit multiple targets or we've hit our stop. But again, presuming things go in our favor, how long could the trade remain open? On a daily time frame, especially one with a trend, something we don't have a lot of, I could be in a trade from 2 to 10 days up to usually 3 weeks or longer, again, depending on expiration. So time frame dictates time horizon. And it's the weekly time frame that really could be very interesting right now. And I know it's not an active trade, but this is not the time to be necessarily a really active trader, although the day trading has been slightly better than it was at the end of 2024. We're starting to get a few day trades that are following through in terms of volatility zones. We'll talk about that a little bit as well. But the time frame that's really getting my attention and the time horizon that's really getting my attention is, what if I give a trade 6 months to a year to really get going? What if the weakness on the daily time frame is just a lot of bearish chop, but the trend on the weekly time frame is up? There's a couple weekly trends we talked about today in the Sector Secrets Mastery. One was the S&P, another was the Dow, another was Apple, and there are some individual names. Those are 2 indices. You can trade via SPY and DIA, and here's a very popular stock that a lot of folks want in their portfolio, Apple, that have weekly time frame trends that are triggering a mean reversion. The lines right here, the green, the yellow, and the red, these are the mean reversion lines. That creates a mean reversion zone. And this is, again, a weekly time frame where I have a 6 months to about a 1 year sort of minimum time horizon. We could be in this a while. And this is a time frame we get one new candle every week. It's slower moving. Oftentimes when things look very bleak on a daily time frame, there's lack of clarity or no trends. don't stay stuck there. Ask yourself, well, where is the trend? It'll usually be somewhere. If it's not on the very short-term time frame, maybe it's on a very long-term time frame. And when I look back the last couple of weeks, one of the things I'm starting to see as we're about halfway through the month of January is short-term day trading and really long-term, what I would consider to be more of a position trade or more of a portfolio type trade. Those are where the clarity is. So this is a slight adjustment that we can make. The other thing that I remind myself and everyone who's listening is, in terms of two major themes we're dealing with, please remember that bonds are looking ahead by about 3 months. So they're not making commentary on the 14th of January. They're making commentary about 3 months from now. They're making commentary about April. Just like in October, when bonds started heading lower, meaning yields started going up, it wasn't commentary about the equity markets through October, November, and December moving lower. In fact, they hit multiple all-time highs into Q4. Bonds in October, we're talking about where the market could be in January. And in that regard, they're right. If your time horizon is longer, minimum 3 to 6 month outlook, bonds are going to be helpful. If you're a short-term active trader, where your time horizon is less than 3 to 4 weeks, bonds are not going to be helpful, right? It's not a matter of bonds being good or bad. It's just, what are they good for? Okay. The other narrative that's going to be really important to keep in mind is, gang, uptrends are easier to trade than downtrends for the vast majority of traders. We have fewer uptrends, and that's why this environment feels as difficult as it is. And on the left side of this screen are a number of the notes I made during the swing trading session in the Sector Secrets Mastery today. And a couple ideas here. Number one, if there is fear in the marketplace, and we'll go over a lot more of this in the premium video, if there is fear in the marketplace, looking at defensives like staples and utilities, looking at dividend yielding sectors like energy, or dividend stocks like aristocrats and kings are going to be very, very helpful. There are some stocks that have strength, Magnificent Seven, Google, Amazon, Meta, Tesla. Those are your best of that group. I would avoid Apple, Microsoft, and Nvidia. Uncorrelated. This is where it's going to get kind of interesting. Uncorrelated for me means not heavily weighted in the broader averages, S&P, Dow, NASDAQ, right? So cool place to look for that might be small cap. It might be things in the FFTY ETF. It might be very low weighted stocks in somewhat popular sectors, or it might be industries like airlines. That's a long position that we have in the Sector Secrets Mastery, where, jets are going to be somewhat sensitive to the Dow and somewhat sensitive to transports, but they are on their own journey and they're bullish, right? So getting a little bit less correlated, directly correlated to the broader averages. And then crude oil, XLE, XOP, OIH, looking at that strength in crude. And this is where we are mid-month. It's a very different gear that we've shifted into. I wanted to talk about why and what and where, so we have a good foundation to take into the remainder of this quarter. Obviously, next Monday is the inauguration. We start to get all the anticipation and uncertainty of any kind of shift in administration, but the uncertainty will probably persist. And that's why this list and this approach will likely be the way I will view the remainder of this quarter until the trends start to resume. And when that does, I'll talk about it either in Charts and Coffee or here in these free videos. For those of you that are struggling right now, you're thinking, okay, Rag, this makes sense. I'd like a little bit more information on this. Two things. Number one, of course, stay tuned to the content that we put out here at the Simpler Trading YouTube channel. But number two, on the 12th of, so just about a month from now, on the 12th of February, I'm going to be doing a webinar about an upcoming immersion where we're going to take a group of traders through the Sector Secrets Mastery with live trades, live trading sessions, and all the different types of things that I use to navigate great environments like 2024, but also difficult environments like 2025. If you don't have a process for watch list building, if you don't have a process for stop loss placement, position sizing, this is absolutely going to be a game changer for you. So I just want to give you all a heads up about what's coming up, because this challenging environment likely not going to go anywhere. And if you can learn how to trade in an environment like this, there's no environment that you won't be able to tackle. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.